the hidden financial system billionaires use, and why most Americans never notice. Opening, the invisible system. What if I told you the financial system you interact with every day is not designed primarily to make you wealthy, but to make you predictable? Predictable spending, predictable borrowing, predictable investing mistakes. And the people at the top, they don't participate in the system the way you do. They design it. Today, we're going to connect three powerful forces: embedded finance, quantitative finance, and consumer debt structures. Individually, they seem unrelated, but together, they form the hidden architecture of modern wealth. Before we go further, do you believe the system rewards financial intelligence or financial obedience? Comment intelligence or obedience. Part 1. Embedded finance, the invisible banking takeover. Let's start with something subtle. When you open Uber, when you buy from Amazon, when you finance an iPhone, you think you're just using a service, but behind the scenes, something bigger is happening. Financial services are no longer inside banks. Banks are now inside apps. This is embedded finance. It allows companies to offer loans, issue cards, control payments, collect transaction fees, analyze spending behavior. And here's the powerful part. When a company controls your payments, they control your financial rhythm, your income timing, your credit usage, your purchase triggers. Now think deeper. If a platform sees when you get paid, what you buy, when you're short on cash, what you finance, they can predict your next move. And prediction equals profit. Let me ask you something. Have you ever accepted a payment plan because it felt easier than paying full price? Be honest. Comment yes or no. Here's the uncomfortable truth. Embedded finance doesn't just make transactions easier, it increases spending frequency. And small friction removal creates massive revenue extraction. The wealthy understand this. They invest in the platforms. Most people just use them. Ownership versus participation. Which side are you on? Transition. Follow the data. Now let's go one layer deeper. Embedded finance collects behavioral data. But who turns data into money? Wall Street. And that brings us to the second layer of the system, quantitative finance. Part 2, quantitative finance, the algorithm advantage. Most retail investors think markets move based on news, but the majority of trading volume today is driven by algorithms, mathematical models, statistical probabilities, high-frequency execution systems. This is quantitative finance, and here's what most people don't realize. Markets are no longer emotional arenas, they're mathematical ecosystems. If you buy because of hype, an algorithm may be selling into your excitement. If you panic sell, an algorithm may be buying your fear. Now ask yourself, when you invest, are you using a system or reacting emotionally? Comment system or emotion. Here's the wealth gap difference. Average investor mindset. What stock will go up? Quant mindset. What is the probability distribution of outcomes? Billionaires don't try to be right. They try to manage risk better than others. That's a massive shift. And here's something most people never hear. The goal in advanced finance isn't maximum return, it's controlled risk exposure. Wealth grows through consistency, not excitement. Let that sink in. Transition. From markets to your driveway. Now let's bring this from Wall Street back to Main Street, back to something nearly every American has, a car payment. Part 3, the car financing loop. Here's a powerful observation. Most dealerships don't make the majority of profit from the car price. They make it from financing, interest margins, loan length extension, insurance packages, gap coverage. And here's the psychological trick. They don't ask, can you afford the car? They ask, what monthly payment feels comfortable? That shift changes everything, because focusing on monthly payment disconnects you from total cost. A $30,000 car can quietly become $42,000 over time. Now imagine repeating that cycle every 5 to 6 years. This is how wealth slowly drains, not dramatically, quietly. And here's the deeper pattern connecting everything. Embedded finance increases spending. Quant finance extracts trading advantage. Consumer finance captures long-term cash flow. The system isn't loud, it's subtle. Let me ask you, do you calculate total cost before signing loans or just monthly comfort? Comment total or monthly. Part 4. Why billionaires think differently. Now here's the real shift. Wealthy individuals ask different questions. Instead of how much does it cost per month, they ask how does this generate return? Instead of can I afford it, they ask does this increase my leverage or reduce it? Instead of what's trending, they ask what's statistically sustainable. They build systems. Most people chase outcomes. That's the hidden separation. And here's something powerful. Debt is not bad. Unproductive debt is. The wealthy use debt to acquire appreciating or cash-flowing assets. Most people use debt to consume depreciating liabilities. Same tool, different outcome. That's not a conspiracy. That's financial structure. Final section, the mindset shift. So what can you actually do? Step 1. Start tracking total financial flows, not just income. Step 2. Study how platforms monetize behavior. Step 3. Invest based on structured strategy, not headlines. Step 4. Before financing anything, ask, does this create future income or future obligation? And here's the most important question of all. Are you participating in financial systems or building one? Pause, because that answer will determine everything. If this video made you think differently about money, subscribe. In the next episode, we're breaking down how the ultra-wealthy legally use leverage to multiply wealth while minimizing personal risk. And trust me, that one will change how you see debt forever. Before you leave, comment this. What was the most surprising insight in this video? I read every comment, and your answer might shape the next document.